South Africa's banking index rose the most in 14 years as the country appointed its third finance minister in a week. Mohammed Nalla chats to us now. Mohammed, what did you make of Gordon's first or latest speech?
So I think we saw Minister Gordon deliver an address that was largely in line with what the market had expected him to say. The commitment to the expenditure ceilings and caps, the commitment to saying that if there are any additional expenditure priorities that crop up, those will be viewed in the context of where will we find the additional revenue. The market is quite concerned around what those revenue-raising exercises will be in the main budget. But by and large, if I had a look at the market's reaction, the market post Minister Gordon's address to it, the rand has already weakened an additional 10 to 20 cents. And so that's telling you that they're potentially looking through what might be construed as political spin. They're going to want to see actual delivery before clawing back some of that credibility that was lost in the wake of last week's actions.
It would seem investors are the biggest threat to Zuma's decision-making. How much damage has been done to the South African economy over the last few days, not only in terms of reputation, but do you expect to see these events being reflected in future data, for example?
Well, I think if we go to the aspect of reputational damage, that I've kind of alluded to in terms of where we've seen our bonds as well as the rand trading. And unfortunately, when you have a look at the kind of reputational damage or the credibility deficit that has opened up over the course of the last few days, that is something that's very difficult to recuperate. It takes, you can lose investor confidence in an instant, and it then takes you a very long period of time before you actually gain that confidence back again. So, I certainly think that's something that we will see lingering with us for quite some time. It comes in the context of international investors who will already be quite hesitant on emerging markets as a whole, and so I would expect that to continue to be a drag in terms of South Africa's ability to attract foreign capital. Notwithstanding that, in terms of being reflected in future data, the fact of the matter is, even if you strip out the noise that was associated with this particular political event, the macroeconomic data in South Africa continues to maintain a negative trajectory. It did earn us a ratings downgrade, and thus far, I don't see any change materializing to the positive with regards to those macroeconomic data prints.
Analysts say the forward rate agreement market is still expecting 50 basis points more in hikes than it was a month ago. This will mean a slightly higher bad debt charge for banks next year. In terms of future decisions, though, do you think this will materially change the policy path?
I think the adverse move we've seen on the rand is probably one of the key determinants to that, in that the market is now pricing in a slightly steeper or more aggressive hiking profile from the South African Reserve Bank. That is probably correct, given that the Reserve Bank is quite concerned around the second round impacts of a much weaker rand on the real economy. And so on that basis, I think as funding costs rise across the economy, it is quite conceivable to imply that that would mean a higher bad debt charge for banks. We've already seen the banks provisioning for higher non-performing loans and so forth, but the profile of that will also, I guess, be determined by what the U.S. Federal Reserve guides with regards to this week's FOMC meeting.
Mohammed, as you alluded to, the appointment of David Van Rooyen caused the ZAR to sink sharply, but the decision to reverse this and reappoint Pravin Gordhan into the role has helped it to bounce. Once the noise is quietened, what is your outlook for the ZAR moving forward?
So preceding the most recent news flow, our outlook on the rand had been quite bearish. We were anticipating a brief pullback or correction in the rand post the Fed's FOMC this week, mainly because we were of the opinion that a fair amount of that was priced in with regards to the Fed move. At the time, we were anticipating the rand at least pulling back into the upper 13s. Now that this political event effectively has put an additional risk premium on top of the rand, it means that these reactions will be off a much higher base, but that our longer-term view on the rand continues to remain bearish. We continue to face massive structural reform issues in South Africa. Those issues are not going to be dealt with in the shorter term, and I think the key event risk will be the main budget at the end of February next year. But by and large, we see very little reason to imply that we've seen any change in direction to the negativity, to the downside growth to the South African economy. And on the back of that, we would expect the rand to continue drifting shifting weaker during the course of 2016.
Mohammed, so great to catch up with you and have your insights on these incredible events. Thank you. Well, viewers, it is of course Fed Week, but click back for all of the potential market movers in our week ahead with Jessica Walker. Bye for now.